Yes, that's correct. Kelly, this earnings season is going to be absolutely critical for the health of the overall market. And we've really started to see this last quarter. When you look at PayPal in particular, you now have 3 quarters in a row where this stock has tanked on earnings, and each time it's getting progressively worse. I know people are trying to come in and buy the dip on this, but this stock is in a downtrend, and I just don't see any way that it can possibly rally prior to the report, given the reactions to the last 3 reports. So I'm short this stock. I do think it's a bail if you're a long-term buyer here. I'm trying to trade it to new 2022 lows.
So say that again. So we're around $100 a share right now, and you're looking at where is kind of the exit target?
I'm looking at about $85, $90.
Wow. Okay. All right. Putting her money where her mouth is. PayPal gets a short in Danielle's book today. Let's move along to Carvana, which is down more than 50% this year. Of course, it's been this huge, amazing, super hot auto market, but now in the middle of a reset. You mentioned, look, it's still not profitable. That's a big red flag. What else is a red flag for you here?
So with this setup in particular, I'm looking at any stock that rallied exponentially throughout 2022 and 2021, and especially the stocks that just really couldn't measure up because they're just not making money. When you look at Carvana, that does fit the bill. We've seen a major fall in this one. I mean, at one point it was $376 a share. But I think also they have a lot of headwinds. You have used car prices that are going through the roof. It's difficult to get a new car. So, why would anybody sell their car if they can't buy a new one? So, you have those issues. But also, if you look at the technicals and you look at the way that it's reacted to earnings, yes, last quarter it did trade higher by 7% after earnings, but it's just been down and down ever since. So I think we have more downside ahead. And I think that if this breaks the lows right here, we're going to see a nice flush.
Okay, and it's just around 106, so a similar price to PayPal, which we mentioned a moment ago. And I have a similar question for Carvana and the next one, which is Wayfair. Wayfair is also down about 40% this year, more than 60% off its highs. Huge exposure to higher rates and the housing market, obviously. Would these still be candidates for shorts? And I know that's what you're saying, that they are. But after the moves that we've already seen, there's probably a lot of people wondering, OK, at some point, we start looking for the value play here. Why don't you think we're there yet for Wayfair?
I just don't think we're there primarily because of the technical pattern. I mean, yes, you are going to start seeing buyers come in on some of these beaten down stocks at some point, but I'm just not seeing buyers. We're continuing in a downtrend. If you look at the way that investors have reacted to earnings, I think that that's really critical. People like to look at EPS, but I think that you also need to look at the way that the stock traded after an earnings report. If you look at Wayfair in general, you see last quarter, it gapped down 16.9% on earnings. The quarter before that, 7% on earnings. That is showing that investors are not happy about what they have to say. And this company also losing money, and they haven't been doing well in the current inflationary environment. You have problems with the supply chain. And I don't think that people are rushing out to buy new furniture given the fact that, their grocery bill is exploding. So I do think that we can see lower prices in Wayfair, and I'm actually looking for a break of 100 and a trade down to about 90.
Does it mitigate your bearishness at all? The fact that Bed Bath has I think the last I checked, it might have been positive on the session, even when they had really terrible EPS results. Their comps, they were talking about being down 20%, and yet the stock kind of hanging in there.
Well, Bed Bath & Beyond is an interesting take because this one actually has a lot of high short interest. And so what will happen with that stock in particular is if there's news that's not great, but not terrible, you see a little bit of short covering. And so this is actually one that I will keep on my list for any potential type of good news, because sometimes you can get a quick pop higher on a short squeeze. As far as the actual news is concerned and the possible good news in Wayfair, with any of these setups that are on my earnings destruction list, that definitely happens sometimes where the earnings report is actually a little more positive than I anticipate. But because of the overall downtrend and because of the overall trend in earnings as well, if that does occur, what I love to do actually is I like to enter the trade post earnings and short it for a continued move lower in the next couple weeks.
All right, so that brings us to your final call. It's the only buy. It's Caterpillar. Pretty straightforward story here. You think they benefit from rising commodity prices. How bullish are you?
You know, I like Caterpillar here. I don't think that, we're going to see any type of massive explosion in the stock. It's a nice, slow and steady winner. It's been consolidating for a while, but the reason why I like it is because it's a large cap stock in this overall market environment. It's really volatile. It's really best to stick with companies that have a long history, that are leaders in their field. And with Caterpillar in particular, they have an energy segment, and then they also have a mining segment. And due to rising commodity prices that I believe are continuing to go higher, well, I think their construction segment might have a little bit of issues.
Right.
I think that the other two segments are going to help it continue rise and retest previous highs and potentially go on to new highs here in the next few months.